Thank you all for joining us this afternoon. My name's Brandon Tilley. I'm an accountant at Smart Business Solutions by day, and then by night I've recently taken over as the Treasurer of the Committee for Mornington Peninsula from Shannon. So look, I'll be monitoring today's webinar and all the questions that you come through, I'll look to filter through them, and any that sort of reflect at the time, I'll ask, and then if not, we'll go through them all at the end. Just some housekeeping before we get into it. It'd be great if you could all mute yourselves just while we go through the webinar. And if we could all use the Q&A button that you find down the bottom of your screens to ask questions as we go, that would be terrific. So I will just introduce today's presenter. Today's presenter is Shannon Smith. She is the founder and managing director of Smart Business Solutions. And Shannon has recently taken over as the president for the Committee for Mornington Peninsula. Bruce has taken a step back following his appointment to the Whittlesea Shire as an administrator. He's still actively involved with the board, but Shannon's just taking the lead as the president. So she's a leading tax expert within Australia, and no one's better placed to take us through today's webinar than Shannon. So I'll hand over to you.
Great. Thanks very much, Brandon. Welcome, everyone. Thanks for joining us again. I know that now we're up to JobKeeper version 2. Just to give you a bit of background for those of you who are not members and are maybe not as aware of the Committee for Mornington Peninsula, we will be putting these slides and the recording up onto our webinar, up onto our website later. But just a bit about who is the committee. You know, I mean, I guess the Committee for Mornington Peninsula was founded probably just over 18 months, just over 12 months ago, 18 months ago. And it's really a group of locals that we really we love living and working on the peninsula. We've all kind of come together to really help try and create some opportunities for the future of the peninsula and really try and help push to do a better job, I guess, at getting some state and federal government funding support, policy attention, and some sustainable investment into our peninsula, so it really is, you know, can continue to be the place that we all enjoy living in. So we have actually got, I guess our purpose of it is we do want to be an independent member-based organisation, and we really want to help lead and influence the long-term outcomes and contribute to a strategic objectives of the Mornington Peninsula, looking ahead, influence, and also providing leadership. So we do welcome you to get involved. Our 5 key policy pillars, which you will see those on our website, but the focus points, we're not here to advocate for, I guess, individuals or independent situations. We're more looking at the overall greater good of the peninsula. So really looking at the regional designation that did get some attention recently with the recent lockdown. A lot of people didn't realise we weren't regional. Improving and developing our infrastructure that supports economic activity and jobs. So really looking at buses, the trains, you know, and how do we get people around and other aspects of infrastructure. Looking for suitably zoned land to support sustainable investment, growth and jobs, and then ensuring access to training and education, and also trying to nurture a supportive and business-friendly environment for all of us small business owners here on the peninsula. Many of you may have already met, and those that haven't, I just want to introduce our Executive Officer, Alina Tooley, who is recently appointed a few months ago. She really is the public face of the Committee for Mornington Peninsula. She has a lot of experience in these types of areas and has been really helping us action some of the ideas and that we're trying to push forward. So just to give you a bit about the Committee for Mornington Peninsula. What I'm going to cover today, looking at the future of JobKeeper. How do we go about moving from what is now called version 1 to version 2 of JobKeeper? Other stimulus measures that are available, and then also how do you look at the business rebound and refocus as we progress through this area? So a bit of what's happened in the last week. I guess we've seen a trainer package announced, extension of the SME loan guarantee scheme, extension of the JobKeeper announced with changes to the coronavirus supplement and also the JobSeeker, and then an economic update released with the extension of deadline on the early release of super. So that's what we've had in the last week alone. Although coming into this, in this JobKeeper, these are just announcements at the moment. There is no legislation that's been released or passed. So what the process is, and I think a lot of small business owners learned about how tax legislation came in, through the recent JobKeeper. So it does come via the government, goes into Treasury, then it is passed as legislation. Once it's passed as legislation, it goes on to the ATO to administer. And that's what we saw last time. We had changes in legislation, but we also had changes in the way in which it was interpreted by the tax office. And that's why I think in 1 week alone, we had 4 changes to the same area. So if you thought you got confused last time, there was a clear reason for it. Now, there is still quite a bit of planning and assessment that we can do now, as we do expect that this version of JobKeeper will go through a lot smoother and probably with less changes, because obviously there was a lot that was learnt along the way. So you can still look at the current JobKeeper eligibility, look at your June 2020 quarter turnover figures compared to June 19 quarter turnover figures, and then the average hours worked in February 2020. So I'm going to go through what does that all mean for those of you who are on JobKeeper at the moment. So the initial JobKeeper scheme runs through from 30th of March through to 27th of September 2020. There are 13 separate JobKeeper fortnights, and the current payment rate is $1,500 per fortnight. What's going to change? The scheme has now been extended to the 28th of March 2021. So basically another 6 months, but it's in 2 phases. There's going to be reduced payments rates, 2 tiers of payments, and there's going to be additional decline in turnover tests as well. So JobKeeper 2.0, what do we have? The entity will need to meet the existing eligibility rules. Basically, if you're eligible for JobKeeper now, you need to then also be eligible under the new rules. But if you're not eligible for the JobKeeper now, you won't be eligible for JobKeeper number 2. So you must be eligible for JobKeeper number 1 to be eligible for JobKeeper number 2. Otherwise, you're unlikely to qualify. Treasury states that the JobKeeper will remain open to new recipients. What that means is, as long as you satisfy the requirements, you can register for JobKeeper between now and 27th of September if you do satisfy all of that criteria, and that would then potentially put you into the place of being eligible for JobKeeper number 2. The JobKeeper payment will continue to be paid in arrears. So you will be paying for the wages to the staff members, and then you'll be getting paid by the tax office after that. So the existing turnover reduction test, many of you may be familiar with this, so I'll just touch on this. You do need to pass the test for at least one of those. Now, if there's any businesses on this webinar at the moment who haven't yet applied for JobKeeper because you haven't yet qualified, or maybe you've just qualified now, please do get that registration in. Make sure that you do satisfy this criteria, because that will give you a potential to be eligible for JobKeeper number 2. So what we had, and just to highlight so you can see what the differences are, previously we looked at it on as a monthly test or a quarterly test, and it could be based on your projected GST turnover for the 2020 period compared to the current GST turnover for the corresponding period in 2019. So you were able to, under JobKeeper version 1, look at the projected figures, and you could qualify for the JobKeeper payments from the very first fortnight from when you pass that test. What are the new tests? And this is what's one of the most important parts, and I really need you to start planning around this part of it as to whether you will still get the JobKeeper or not, because this will impact your business from a cash flow perspective. So under the new turnover test, to qualify from 28th of September, so there is no change to the existing JobKeeper. I know there were a few people concerned that that may be going away. There is no change. If you're in now, it's continuing. But for the first phase of part 2 of JobKeeper, which is 28th of September when the old one finishes up, through to 3rd of January, you must be able to show that your actual GST turnover for both June 2020 quarter and September 2020 quarter has dropped by the required amount. So it's actual, there's no projections in it now. And so it's basically looking at your June BAS, if you're doing a quarterly BAS, or if it's monthly, looking at the quarter, and also for June and also September. To qualify for the JobKeeper payments in the period of 3rd of January 2021 to 28th of March 2021, you need to be able to show that you have actually dropped by the 30% for each quarter of June 2020, September 2020 and December 2020, that they've all dropped by the required amount. Now, the new turnover test suggests, the Treasury guidance suggests that the entity needs to pass the test for each of the relevant quarters. You cannot just show a combined reduction of the relevant amount. That is concerning for us in the sense that I know when we open back up again, some businesses had quite a decent month of June as they open back up again. So potentially they bumped their June quarter up a bit, and maybe, you know, you've only fell by a little bit, yet we're going to really see the impact now with the lockdown again, and August still, you know, a bit in lockdown, and who knows where this lockdown is going at this point. So that you may actually fail on June, but would be in on September. And unfortunately, you do need to have the 30% reduction for both of the quarters. The ATO will be given discretion to set out alternative tests. You may recall back to the JobKeeper number 1, we had alternative tests where if the business was fairly new, was seasonal, there may be alternative tests, and we do expect these will be very similar to the prior alternative tests. The only difference will be it must be based on actual information, not projected financial information. So we will have to wait and see on that, but we do expect that that will be fairly similar to what we had before. So just to give you an example on, and so you can relate this into your business, ABC Proprietary Limited, if you're assessing the job eligibility for JobKeeper for the post 28th of September through to the 3rd of January, so that's the first phase of version number 2, you've already qualified for the existing JobKeeper rules. So if its GST turnover has fallen as follows, so it fell by 40% in the June quarter 2020, 25% for the September quarter 2020, and 33% when you actually look at it on a 6-monthly basis. So can the company access the JobKeeper extension? Unfortunately, it can't. As I mentioned earlier, it's not about what happened in the 6-month period. So the fact that you were down 33% for the 6 months, you are not eligible. You need to be 30% income reduction for the quarter end of June and the quarter end of September to be able to access post end of September for the JobKeeper. So the annual GST turnover is going to be used to determine eligibility rather than the projected GST turnover. And that's going to be really easy for the ATO to review that, but also probably kind of easy for you to prepare, because it's going to be about looking at, well, what was your VAS? What was the number on your June VAS in 2020 versus the number in 19? And also the same as your September VAS and compared to the 19. Now, any businesses that are on the line, and I did this presentation earlier this morning, there were a few on our webinar this morning. If you might not have a requirement to lodge a VAS at this point because you have annual VASs, the ATO will be able to provide some guidance. The Treasury will give guidance, and then to the ATO administering as to how those entities will be able to do this and how they can calculate it when they're not actually required to lodge a VAS. So that will come out. And we do have a little bit of time. Obviously, this is coming in for end of September, so there will be some more guidance coming out on that one. Now, the turnover reduction thresholds, there's been no change in those. So for pretty much probably everyone on the call today, it'll be the 30% reduction in your turnover. So there's been no change in those. So now on the timing issue, so the businesses you'll need to assess your eligibility for JobKeeper before the VAS due date to meet the wage condition. Now, if you go back to the JobKeeper number 1, you might recall the wage condition was to be eligible for JobKeeper, you needed to have paid the wage, the appropriate wage to the employees by a certain time to then be able to claim the JobKeeper back off the government. Now, to do this, because your VAS is actually not due until, in a sense, late October, even potentially later when you lodge through an agent, you actually will need to get your VAS done for September really quickly. I recommend you get online 1st of October, reconcile, if you're on Xero, reconcile all of your transactions and get the VAS done fairly quickly, because what you want to know was, did you qualify with the September quarter? Because if you did, you want to make sure that you're paying the correct amount in October to your respective employees so that you are then eligible for that payment in October. Now, look, there may be some discretion given to the ATO to extend the timing that the entity has to pay the employees to meet the wage condition. They did extend it quite a bit in the first JobKeeper. I suspect they won't give us too much time at this point, because they've got a lot more advance notice now, so they may give some extra time. But what I would really highly recommend, get yourself organised. If you do your BASs, do them on the 1st of October. If you have a bookkeeper doing it, get onto them early and let them know that you're going to want that done ASAP, so that you can assess your eligibility for the JobKeeper. So what happens with failing the additional test? The fact that you're failing the additional test to stay in the JobKeeper for version 2, it's not going to impact your eligibility for JobKeeper JobKeeper number 21. Number 1, you would have gone through that assessment, assessment now when you assess your eligibility for the JobKeeper now, so that should not impact that. You do still need to make sure you check that you're meeting your ongoing requirements, doing your monthly reporting requirements, making sure you're doing the appropriate amount to your employees, and making sure those employees are still working for you. So there are still those requirements that you need to do up until the 27th of September to make sure that you're still eligible for that as well. So just another example, XYZ Trust is assessing eligibility for the JobKeeper for the period from 4th of January to 28th of April, so 28th of March 2021. So this is the second phase of JobKeeper number 2. Already qualified for the existing JobKeeper rules. So we've done the December, we're doing the December BAS, and this is what we've identified. We've said, okay, 50% reduction in June 2020, 37% in September 2020, and we've just done the December BAS, and it's 28% reduction. So can the trust still access the JobKeeper extension? The answer, unfortunately, is no, they can't for the January to March. They could, and they probably already had, from the extended period from September through to December, but they can't do it from the January because the March quarter is not, the December quarter is not 30% under. So when it comes to looking about the January to March, the last phase of the JobKeeper, you need to have had a 30% drop in the June 2020 quarter, the September 2020 quarter, and the December 2020 quarter. So it's really about the JobKeeper focus now is probably really the focus on trying to wean businesses somewhat off needing this, but realising that some businesses are, and especially at the moment, in this shutdown phase, and really being able to give that support as it goes along. So looking at the employees, there has been no change to the eligibility rules for employees. You need to have met a number of specific conditions as at 1st of March 2020, which many of you would have gone through that process at that time. The certain conditions in regards to the relevant JobKeeper formats, and it's still the same. That has not changed. So it doesn't apply. I know some of the questions we did get this morning, I can see some popping through now, were questions on, well, I've hired someone else, can they now become part of this second wave of JobKeeper? Unfortunately not. They have to have had the same, they have to have been eligible employees at 1st of March, the same as you did in your first process. So it's going back to that stage. And again, it is only one employer can claim JobKeeper payments in relation to a particular employee. Now, what we do have with the employees, though, we do have lower payment rates. So from 28th of September to the 28th of March, so this is the next round of the 6 months, the payment rates will be reduced, and they're also split into 2 tiers. Now, the rate for employees will depend on whether they worked in the business for at least 20 hours a week on average in the 4 weeks before 1st of March 2020. I'll go through that in a bit more detail. The rate for eligible business participants, so that's those of you that own and run your business, but you don't receive a wage through your business, so you're most likely being considered an eligible business participant. That will depend on whether you've been actively engaged in the business for at least 20 hours per week on average in the 4 weeks before 1st of March 2020. Now, there is a definition on this eligible business participant, so it's not someone who's just passively involved, you're actively in the business. I know for myself and most of my clients, I think when you're running a business, you're literally turned on 24/7 in your business, and you're wearing many hats. in your business. So you should be able to justify that you're actively involved in the business as well. So the payment rate. So this is where we've got 2 tiers of payments and we've got reduced amounts. So from 30th of March to the 27th of September, which is our current JobKeeper, we're getting $1,500 per fortnight, regardless of the number of hours worked. Now, you might all recall at the very beginning, we also gave lots of free money to 16 and 17-year-olds. Now, that rule they were able to obviously quickly change at the beginning. What we did find during this period is we had a number of people that were maybe working only 3 hours a week and all of a sudden got a very big pay increase. That part has been corrected as part of this next phase. So from 28th of September to 3rd of January, the higher payment rate will be $1,200. So it's going to reduce from $1,500 to $1,200 a fortnight. The lower payment rate is $750 per fortnight. And this is for those employees that are that have worked on average less than 20 hours a week during the month, the 4 weeks before 1st of March. And then you've got from 4th of January to 28th of March, we're going to have the higher rate going from $1,200 down to $1,000, and then the lower rate down to $650 per fortnight. So determining the hours worked. So this is where, this is a bit of work that you can do now to get yourself ready and have a look at it. Obviously, your full-timers, you're not going to have an issue for that. But the ATO will have some discretion to set out alternative tests. So we'll find out what those are. I'm expecting they'll be common sense alternative tests. I think when it comes to the amount of hours, so where someone's hours were not their usual during February. For example, someone was on holidays, they were volunteering during the bushfires, or they just weren't employed for that full month. So there will be a bit of common sense, I think, applied for that. But what they're trying to look at is, we've had a situation now where people working, 2-3 hours have been getting the full amount. What they're saying is if they on average work less than the 20 hours, they'll be getting a lower amount. The ATO will provide guidance on this, and it may need to be guidance around also those that are on non-weekly or non-fortnightly pay periods. But again, I think that'll come down to the days worked as well. So eligible business participants, currently you do need to be actively engaged in the business to access it. So, and it's not a really defined term. There is a little ATO guidance on it, but it is a bit loose. The new rules will require hours of active engagement in February 2020 to be quantified. Now, I don't know about you, but I would probably not want to write down how many hours that I worked in my business on a daily basis. I probably wouldn't want to know that total hours, and I'm sure none of us on this call have actually done it for February 2020. So how's that going to be done? I'm assuming that common sense will prevail on this, but what they are wanting to see that someone is actively involved in the business. But what came out from Treasury is that they said that the business eligible business participant does need to have the hours that they worked in February 20. And I guess what you're looking at, did you work at least more than 20 hours a week on average to be eligible for the full amount? I suspect most business owners, that's not going to even be very hard to achieve that. Some of the other key points, an entity needs only to pass the turnover reduction test once to qualify for the existing JobKeeper rules. Now, you might recall when the existing rules came in, at the beginning we said you're going to have to re-qualify each month. Then they changed it and they said, no, once you're in, which is where you're all in and right through until the 27th of September, even if your turnover picks up. Now, I've had a number of people contact us a bit panicked saying, actually, I've done a lot better than I had expected for these different reasons or different changes when they've opened back up. And I'm really concerned I'm going to have to pay back the JobKeeper. Once you're in, provided what you based your assessment on when you went into the JobKeeper is factually correct. You've got support for the projections you did. Once you're in, you're in. The ATO may review you, but as long as you've got the support from that time, you should be okay from that perspective. What they are going to change going forward is you're going to have to do that retesting. So you're going to test to come in basically at the after the 28th of September. You're going to test to come into there, and you're going to have to test again in January that you can stay in from a turnover reduction perspective. Do be careful. Feel free to contact us if you need, if you've got any business sale acquisitions going on or internal business kind of restructuring or anything to do with Any employees that you've got on JobKeeper now, I had a crazy situation that someone had them on full-time and then put them on to casual, but then one of the casuals hadn't been with them 12 months. So by taking them off even though the casual is still working full-time hours, and so that's going to present a problem. So just before you do any of those, let us know just so that we can guide you to make sure you don't inadvertently take an employee out of eligibility. So just to go a little bit on the coronavirus supplement and the other aspects on that, currently it's paid at $5.50 per fortnight until 24th of September, and that's going to reduce to $250 per fortnight from 25th of September through to December 2020. The coronavirus supplement, it may not be, as business owners, you may not be getting the coronavirus supplement, but you may have a partner who's getting it. You may have, kids, friends, family. So I just wanted to go through that as well so that you are able to assist them if they have those questions. But the eligibility remains the same, even though the payment rate will be reduced. It is not income tested, and it's available to all of those on your JobSeeker, youth allowance, parenting payment, etc. So that's the change on the coronavirus supplement. Then we do have the JobSeeker. This has still got expanded access to JobSeeker and Youth Allowance Seeker, and it's going to continue to apply until December. There are some certain restrictions that are being reintroduced, such as the asset test, liquid assets, so what cash have you got in the bank, and waiting periods that will be reintroduced from 25th of September. Partner income testing will now be modified 25th of September. Job seeking requirements were actually reintroduced on the 9th of June as well, and there still will be some waiting periods that will be waived until December 31. So they're getting some changes happening on the job seeker. What you might see with that, I know there were quite a number of clients that were saying they were having some issues with employees not wanting to work on the JobKeeper and saying, well, I might as well get the job seeker because it's only a little bit different and I don't have to work. The job seeker is going to be very, very different going forward now. So I think they'll be wanting their jobs at that point now that that's going to be changing quite a bit. Now the SME guarantee scheme, the government's guaranteeing 50% of the new loans issued by specific lenders to SMEs. The initial phase runs out 30th of September. And the maximum amount was $250,000. The loans were for 3 years with an initial 6-month repayment holiday and were unsecured. Now, I didn't see too many clients actually take these out. I know the banks still do need to go through their process to make sure that you're actually able to afford these loans. And one of the challenges with that was the serviceability on a loan that was over 3 years at an amount of the $250, and how does the serviceability work? So one thing that has been good with this second phase of the SMSC guarantee scheme, and I think there are some real opportunities for businesses, even those businesses that are doing okay and actually want to invest further, this could be a real opportunity to get you a loan and potentially have it, secured a bit by the government, which will be great if you don't have the other security yourself. And also potentially give you some repayment holidays. It's being extended through till 30th of June. But what's different about the second phase, which I think is more appealing for a lot of clients, is that the loan can now be used for a broader range of purposes. So this could actually include potentially equipment or other different areas. Now on the equipment, if you think back to the tax deduction availability till December 31, you can actually claim up to $150,000, 100% write-off for tax purposes on any equipment, plant and equipment that you may be purchased. Now the benefit of that is these loans can be held for up to 5 years rather than the 3 years, which does mean they may be more accessible for you because of the serviceability now over 5 years, not the shorter period. It also means if you did buy a particular piece of equipment, for tax purposes, you can 100% claim it and write it off, which does give you a tax benefit and save dollars. I guess when you get to paying your tax at the end of the year, it'll reduce that. You potentially could have actually had a loan for 5 years. So you'll be paying it off over 5 years, but you got actually the upfront benefit of it this current financial year. And these loans can be secured or unsecured. So depending on the size of the loan, and there will be obviously the government provide some backing on it, there will be, depending on that size of the loan, there may be some security required on it as well. JobTrainer, this may be of interest for those that have apprentices, but there are additional training places that have been created with courses that's going to give job opportunities. I know one thing we often say on the Mornington Peninsula, and we see this from our members a lot, is just the access to basically staff that are trained up, and that is one of the pillars that we are focusing on, trying to reactivate or help activate more education down here and get things moving. Look at Rosebud TAFE, for example. It's quite there's not many classes that are coming through, but there is going to be a lot of these low cost courses available, or actually no cost. So hopefully we'll get more of our especially the youth out to do some education and training on that. There will be a lot of opportunities for businesses to access 50% apprentice wage subsidies, and that's being extended as well. Now, interesting about that extension, something to note, if your business doesn't satisfy the JobKeeper even after September, you may be still eligible then for this apprentice subsidy. So I know if I go on to just the apprentice subsidy, employers reimburse 50% of the eligible apprentice's wage up to a maximum of $7,000 per quarter per apprentice. You can't claim the subsidy and the JobKeeper. Now, I know for some companies, we had some of the apprentices on the subsidy and some of them were on the JobKeeper, depending on what gave them the better outcome, and that was no issue to do either of that. What might be interesting for some of you on this webinar is where you've got a situation of apprentices, and maybe you're not going to be eligible for the JobKeeper after the end of September, where you now can still access this the subsidy here if you can satisfy those criteria for the apprentice wage as well. So there are some opportunities on that. Now, the last one on it is looking at the early access to super. Now, they haven't changed the amount of the early access. Now, I have to say I wasn't the biggest fan of this one. My concern around this, and obviously this is general advice, you need to get your own specific advice. My only concern around this, and I understand if people do need that money, that could be accessed, and obviously probably better to use it now and potentially build up in the future. As small business owners, many small business owners put into super last after everything else, and so there's a lot of small business owners that don't have too much in super, and the concern is taking 10,000 out today when your super is probably at an all-time low. It's not really costing you 10, it's probably even more than that, and once you take it out, it doesn't have the opportunity to bounce back or grow. Now, the withdrawals are tax-free, so I do understand that this may actually be a really good positive thing for businesses to get that extra money. Do remember that there are those state grants that are available. We have our current 5,000, so if you haven't applied yet, if you are on JobKeeper, you've already got the $10,000 state government grant that was given out. They have got the $5,000 one now. So if you haven't yet applied for that $5,000, get in quick for our most recent shutdown. But what the government is doing with the early access to super is just giving you the ability to take this out till December. So there may be some of you who are saying, look, I really don't want to have to access my super, but if I do need it, at least the opportunity's there. You would have had to have made the decision by September. You've now got till December to see if you really, really do need to access it. So it gives you a bit of extra time on that one. So some of the next steps, I would say, we're going to be a bit more organised coming into this JobKeeper. We're not going to have that mad panic that we all saw with the last one. But do check your June 2020 to your June 2019 as per your BAS. You're probably all going through the process now of getting your June BAS. If you are still 30% down for that June quarter, then keep yourself focused on what's happening with the September quarter so that you can be ready for that as well. Have a look at your employee hours in February for those that were not full-time. So any of you casual workers or part-time workers, what were their average hours, so that you know that already up front. And my recommendation would definitely be to reconcile ASAP on October 1st for your BAS to see if you're eligible, so that you really ensure that you have paid the correct amount to employees in the first fortnight in October when you get starting. And I guess when I look at this, and the JobKeeper is really giving a lifeline to a lot of businesses, I think that it's also giving, I guess, a sense of positivity as well, in that, you know, that some businesses, this is just giving that extra boost to keep the people employed and keep the wheels in motion as well. But I think it is a really good time to not just focus on just getting the JobKeeper once it keeps going in September, and if you're eligible to that, because you often won't know that until you get there. You're not going to know what your September quarter is looking like until you're actually there and you get to the first week of October. So what I'd really look at, really strongly recommend, is that you take a step back and have a look, well, where are we now? Am I trading at a loss now? And is that loss, is it not sustainable, or is it something I can turn around? Because, you know, this may be where you need to have that good, I guess, frank and honest advice, and accept reality if the business isn't sustainable post coming out of all of this, so that you don't have a situation, because the personal liability for insolvent trading, and insolvent trading means you keep operating your business even though you know that it's actually not sustainable anymore, and that the business is insolvent and can't pay its debts. The personal liability of that goes away on the 24th of September. So it's really something to have a think about. Where is the business going, or how can you pull back from that? If you're trading at break even, you might want to look at, well, how do I pivot myself? And you may have already pivoted, you know, to keep that at trading at break even. So you are treading water, which was part of the goal for the JobKeeper, was to actually help keep the business afloat, get the cash flow boost and keep you afloat. But what we really want now is you've become used to this JobKeeper payment. How can you get yourself ready to keep going through this, so that when we get to the end of September, we've just got a little pothole in the road, but we can keep it going and get trading above break even. And if you're trading well, then look for the other opportunities that you can do, and to try and keep that going. And I'm saying a lot to businesses now, it's not about just focusing on the next few months. I'd be looking 6 months out and 9 months out. None of us know what the outcome's going to be. And obviously this income coming in, or the money coming in from a JobKeeper, is certainly going to help. And the other cash boost, a lot of you will start seeing the cash boost coming through now. When you lodge your June BAS, you'll see cash boost coming onto your tax account with the ATO. So you can draw down on that if you don't have any debts at all with the tax office as well. But something to really think about. You know, I guess plan for the worst and hope for the best, if that makes sense, when it comes to the JobKeeper and on your eligibility, so that you don't get to end of September and find it a challenge from that perspective. So I do have time for questions if anyone has any questions.
So Shannon, I'll just jump in. So the first one here we've got is about the state government grants. They're just wondering if you could offer any further information on that, or there's any way you could direct them to find that information.
Yes, so what we could do is actually, when we'll email out this webinar, the video recording, and we'll put in the link for the state government grants. So that was announced for all of those in Metro Melbourne, remembering that we're all in Metro Melbourne, isn't that right? On the peninsula, and also the Mitchell Shire. So it's $5,000. So to be eligible for that $5,000 grant, if you're registered for JobKeeper now, you can just fill that in online, answer the questions and the fact that you're in that area, and clients have been receiving that payment within about a week. It's been paid very quickly, so I can get that through. Do you have a question on if I've hired a new employee during the last few months? Can they be eligible? So the employee goes back to from 1st of March. What was the actual criteria there? So it's not about any new employees that you have hired since then, and maybe during this period. It is unfortunate. I know I've seen some clients where people have left and changed jobs, and then they've had to replace them, but they haven't been able to get JobKeeper for the new person. But unfortunately, you can't do that. And then another one, just on timing of when we'll have the legislation. We don't know the timing on when the legislation will come through. I suspect it will not be a surprise to any of us on what the legislation contains this time round. And so I think that we are expecting it to be quite pretty much what we've been talking about today, and we're not expecting any major surprises from that perspective. So I think that's covered.
I've just got one here, Shannon. Just in relation to the state government grants and the cash flow boost, which businesses have already received, are they included in the GST turnover calculations, or are they not?
No, those ones are not included in the GST turnover. They will be included in your tax return, just as the JobKeeper is. That's included as taxable income, but they're not included in your GST turnover. So that's something to just make sure of.
And just the last one, personal shout out, I think for anyone who's using a Xero file to do their accounting, we're going to look to get a video out later this week to show you how you can quickly assess your June and September quarters versus last year. There's a handy little tool in Xero, so we'll look to get a video out for you, which just gives you a quick two-step process so you can check what your turnover is looking like and get a rough idea of whether you're going to qualify.
Yep, that's great. Okay, well, thank you everyone for joining today. Thank you very much for joining. If you do have any other questions, feel free to reach out and let us know. Happy to help out. And if there's anything else that from the Committee of Mornington Peninsula that we can do, or if there's any other, I know we're all pretty webinar zoomed out at the moment, but if there's anything else that could be of interest for you, do reach out and let us know at info@Committee for Mornington Peninsula, and Alina will be able to assist you. So thanks everyone.